What's going on, guys? Start in a few seconds. Wait for people to get here. Just gonna do a little quick update. All right. Well, one thing I think is pretty interesting is this follows a very typical path of whenever price goes below a daily 200 moving average. This is the S&P 500. You could see the 200 moving average here. You're going to get some sort of path that goes down, back up to touch, and then an extension lower, right? Now, it seems that that extension could go down to this level, 630, or it could go down to this level, which is about 615. And so just to show you what that looks like a little bit more zoomed out, I'm going to show you something else that's really interesting. Okay, we're now below the 50 moving average on the weekly for the first time since last year, and that was during the tariff shock. But recently, we don't go below this 50 moving average very, it doesn't last that long. If you go back to 2022, we didn't last that long either. So at some point, we're going to hit one of these two levels. Probably, I'm going to guess the second one here, because you can see this was the last level where there was massive institutional buying, on a big scale, right around the 610 area. So I'm guessing that this 600 to 620 level, will hold. I mean, it's definitely going to hold. It's not like a question of will it hold. It definitely will hold. Also, it's nice to make zones that can go back to different areas. So this over here was an area of resistance previously. Now it's going to act as an area of support. So what's interesting though, and take a look at this here. This is the S&P 500 midterm election years every year since 1950. Okay. So every year since 1950, every midterm election year, the market has dropped since 1950. And I remember thinking about this because I remember in 2018 and 2022, the market went down a lot. So looking back, it actually happens every midterm cycle. The market has gone down. So every every year after an election year, every 2 years after an election year, the market has gone down. But if you look at the returns 1 year afterwards, it's actually astonishing. So I never really understood the panic that people have, um, because it's going to be the best time to buy historically. I mean, especially, given that it's happened every time since 1950. I don't know how you can sit there and say, yeah, we're just never going to come back from this. What I think psychologically is very interesting is that the stock market's the only market in the world where people are not interested in buying things on a discount. You can go to any other market in the world, and if something is on a 60% discount, people will buy it, But the same thing in a stock market, it's really not that interesting. Because if you look a whole year later, we go up, you know, from 2022, negative 24%, next year, positive 23%. It's a 50% swing in 1 year, you know? So, we're entering that time right now where it's another midterm year, 2026, and we're going to enter another cycle of coming back up again. So, it's interesting when you have an actual factual chart from 1950. right in front of you, it's hard to, it's a little hard to disagree with, right? You know, I mean, it happens every year, not even during midterm years, but I've been teaching this since 2014. I've been a financial advisor since 2012, and the psychology of people's own money is very interesting to me because for some for some reason people do not want to buy assets when they're on sale. Um, and the people that always make the most money every year are the ones that have the cash available during some sort of drawdown. It's like even last year during the tariffs. So I thought that was pretty interesting too. So guys, give me a second here. Okay. But yeah, if you guys have any questions or anything that you want me to look at, I'll definitely take a look at it for you. But yeah, this is a pretty interesting chart right here. Every year from the midterm, we have gone up the next year. So, but this is the last big era of buying right here at this 610 level on the weekly. So, at least at this area, we're going to get a whole lot of support. So, we could go down this far. So, just thought that was a pretty interesting chart to look at. Um, yeah, other than that, that's pretty much all I really wanted to come in and just show you guys real quick that every 2 years we bounce back. And the one thing I'm also looking at is that if you look at software right now, we are at a very multi-year support zone right here. So software is down about 60% or more, about 70%. No, maybe about 60%. And so every time from here, we've always come back. But we have a lot of buying underneath it. And so these are stocks like Palantir and Microsoft and Oracle. So this will be an interesting one as well. Meta also is going to be the one. Last time, just to show you guys something real interesting, take a look at Meta in 2022. Meta in 2022 was at 80. And then look what happened. We went from 80 all the way up to 800. It times 10'd itself in about 18 months. Okay. And then from there, we've dropped about 50% so far. And now we're going to be entering this level pretty soon. If we get down about 480 or so, bounces from there back up again, that would be 60% back up to the upside. So a lot of the stuff isn't that hard. It's just timing wise and just being patient for things. But yeah, every year it's always been the same thing. The people with cash available during downturns always make the most money. It's never, you could take the most skilled traders in the world. It almost doesn't matter to an extent because when you have enough cash and you're patient enough to catch the next cycle and you catch the next cycle, I mean, it happens every few months too. I mean, we caught the oil cycle. That was obvious. I mean, we basically kidnapped the president of Venezuela and then said we were going to run their country. And then we just, next thing was Iran. So of course the oil stocks are going to go up. Something I said every day for about, I don't know, 3.5 months straight. And so the oil stocks went up. Um, a lot of them went up more than 50% in a couple of months. So, I some of these are so obvious sometimes. And so that's why I only stick to high probability plays. What's the point of having to stare at a 1 or 5 minute chart for hours, hoping and praying that it gets to a certain level when I can just set up really, really high probability plays that just make sense? You know what I mean? Um, you know, considering oil's price pressure, is this the rock bottom to start buying? For there is a room for more discounts with increased oil pressure. Uh, I mean, we're about to see a bottom pretty soon, right? And you know, we're about to see where oil is about to open up. We're about to see in about 2 hours exactly where oil is. But I'm going to say this is the bottom around here, S&P 500 to go down to about this level. So that's going to be about, I would say about 12%, maybe 14, 13% at the most. We're only down about 7 or 8%. So it's, or 9%, sorry, about 9 or 10%. So it's really not that horrible. I think we go down another 3 or 4%. People flip out, and then we start to get a big swing of buying action, or there's some multinational agreement that starts to be adopted from the world, you know? So something like that will happen. And at that point, this is a very, very strong area for this market right here. And we're about 4% away from that bottom. I don't see it going any lower. And if it does, every bit lower than that would be an absolute uh, any money you put in there at that point will just be more at some point in the future. This is crude oil, and you can see historically we can't deal with oil being over 120. You could go back to 2022. It went down pretty quickly both times, but that's why I'm going to be playing it as a longer term play downwards, because eventually it will go down. It's not like it's going to stay up here for forever. So that's going to be an easy play or high probability play. It's just at some point that will go back down. So, um, that's what I've been setting up with you guys every day on here. When I do my thing at noon every day, and I play it through USO. That's the only thing you can actually play options on. But what would the new IPO, OpenAI, and other companies expect? What about the new IPO, OpenAI? Um, I don't. I mean, I have a bunch of funds that I buy to cover those IPOs. So, um, DX, DXEY, RVI, VCX. You can buy all of those, and they all own different percentages of all of the IPOs, SpaceX and Anthropic and OpenAI and Anduril. So, at this point, I have that covered. But I'm still going to buy shares in all of those companies as soon as they IPO, like the day they IPO, and just hold them forever. Um, but yeah, just to see, like, this is 200 days for oil to go back down 35%. This is where it broke out from. So at some point, this is the 2018 resistance line. Oops, didn't want to do that. 2018 resistance line is right around here. So if it gets above here, at that point, it'll just be easier to play back down. Um, but yeah, the thing I find the most interesting is the S&P 500 midterm election declines and reviews. So every 2 years, the market always goes down for some, during a midterm election. Um, every midterm election, it's interesting to me. Every midterm election, the market has gone down. Um, yeah, every single one, or for a max drawdown at least. It's gone down. So, and then the 1 year forward return is astronomical. You know, I mean, 2018 to 2019 was about a 60% swing. 2022 to 2023 was about a 50% swing. So it is quite interesting to actually see it like this, to actually see, you know, that every midterm election, the market has gone down to some degree, and now, um, the forward return of the following year, just 1 year later, is that much. It's astronomical. If it's every 2 years before midterm election, then couldn't you just short the market every time? If it happens every time, yeah, it's just hard because the timing of it's you can short the market, but the problem is, you know, if you're wrong on the timing, 1 year is still a really long time. So if you short it at the wrong time, you know, shorting is really hard because you have to be so good about the exact timing that it drops, because you'll lose everything if you're wrong. It's not like buying something. So I do feel like it is quite interesting. It is something I did realize, being a financial advisor since 2012, that this does happen every 2 years, but it wasn't. I didn't realize that it had happened every year since 1950. That's something I didn't know until a couple days ago. So, something like this. So when also the biggest thing is that always during periods of uncertainty, the market rallies the most. For instance, during COVID, 2022 was the inflation year. 2023, the bank failures, Silicon Valley Bank, and there were a few others, but they always come back every single time. So when people always ask me like, what's the easiest way to make money? I'm like, just hoard cash and wait for the next time that the market goes down. And we're so incredibly lucky that it's happening right now. Like now's that time. So I just see it so differently, that it was so hard to try to play breakouts on the market going upwards during a time when we were just at resistance for so long. I mean, last year was easy to play too after the tariff shock, but now we can finally, we're going to at some point get the market to do something like this, like we did last year, and go straight back up again, and not just hang out at the top. It's gonna drop down and then go right back up again at some point. And then you could just play every single breakout. And we're gonna find an industry that is during these times, you're gonna find industries that are pretty good to buy during these times. So whether that's going to be energy, I'm assuming, maybe it's going to be metals or commodities, maybe it's going to be space, or AI robotics. Those are my guesses. Maybe you guys have different opinions. I'm not exactly sure. Maybe retail or defense sectors, probably military stocks, um, Target, Walmart, those type of stocks too. So gold and silver reacted positively for the first time with oil prices last Friday. Will they soon explode? I think so. I also we were following recently the we were following recently the buying of bigger firms for, this is silver, for what's it called, for futures transactions that um, larger firms are making. In the last week or so, there's been a whole lot more buying. So the last time we saw that much buying was actually over here right after the big dip that it had. So I'm pretty certain that we're not going to go beneath this area for silver. I'm pretty certain that we're going to get out of this high 60s area and go back up into the 80s pretty easily. So, yeah, I mean, that's what I was saying, during the streams last week, that silver was a pretty good play. And gold as well, because again, even though it doesn't work as it used to with gold and silver. Like during uncertain times, gold and silver used to explode. It doesn't happen anymore, but it's still setting itself up as a nice little secondary support level to go higher. And I'll show you gold in a second. If you guys have any questions, I can answer anything for you. So gold in this area, we actually came down, touched the 200 moving average, and now we can, I believe, start to go back up to these moving averages. So just to show you something interesting, right? Like how much money could you make off of something like this? Like how much would it cost and how much money could you make? Well, let's say we get back up to these moving averages. That would be about, like 9 or 10%. Let's say 9%. Okay. And if we go over here, we type in GLD, this is option strat, just tells you how much money you could make off of an options play. So it's as easy as buying a stock. Like this isn't like anything incredibly hard or difficult to do. But if I think futures is probably 100 times harder than doing this. But if you were to do, let's say, I don't know, like a 500 or I don't know. That's for October. Let's do something more soon, like May. Let's do a 550 call. That's $134. $134 we have until May 15th. If we go up 10% like we said we would, you would make about $362 in pure profit off of 134. So it would cost $134 for one gold contract, and you would make 362 in pure profit. So on top of your 134 that you already have, you would get another 362 if gold goes up another 10%. It's not a bad play, actually. It's a good risk to reward. Would any of you take that play? Put up 134 to try to make 362, and you could take it out at any time. Let's say gold goes up 5%. You would make about 127 in pure profit. So that's not that bad either, So that's pretty interesting. We're still at really good levels for gold and silver, and we're definitely in these extreme uncertain times. So, but I keep going back to this chart because it is so interesting to me. Every midterm election since 1950, we've always had a max drawdown. And then we've always had a forward 1-year return every single time of double digits. And not only that, the lowest time was 2014, and that was 11%. Look at these. They're all like 30, 40%, 50%, 60%. 2018 was about 40%. 2022 is 24%. It's like every single time, every single time the market drops during a midterm election year, it always comes back double-digit percentages stronger. And not only that, like there's only been 1 year where it's not been 20%. Every other year besides 1 year, so like 95, 90% of the time, it's always been more than 25% or 20%. So, it's hard to argue with something that goes all the way back to 1950, in 2026. So it's just quite interesting to me. It's something I always knew, but I didn't know it went back to 1950. I just knew the last like few cycles that usually happens. Anyways, this is the NASDAQ. And so I know we already looked at the SPY to see how long it could go down, but pretty much this is the area just to show you that we're probably going to go down here. Okay. Because this was previous resistance here. 1, 2, here's 3 times. We broke out of it. We went up for a while. Now we're coming back down. We're definitely going to come back down to this area. So shorter term puts, playing this back down, and then just going long Microsoft, Meta, Amazon, Tesla. At that point, it'll just be, pretty easy just to pick and hold. So if you guys don't have long-term stocks, you are at a really lucky time to, be even thinking about it at this point, or adding on to it, because the next 2 years for you are going to be pretty good. So, I couldn't see the reason of not doing this, but yeah, so I just, again, wanted to come on just to show you those levels, show you gold and silver. Also, you can always rewatch these on YouTube afterwards if you want. I'm on every day at noon during the weekday. Um, I've been working as a financial advisor for a really long time now, since about 2012, and I've also been teaching it since 2014. Again, this is our chart of every midterm election year. We've always gone down and then come back up a year later. And yeah, I also have a group that I meet with. I meet with them in the morning. I meet with them in the afternoon. I meet with them at night, just when, I'm on all the time for them. And just so, they can ask questions. I have beginner groups. I have office hours. I always make myself, I give my cell phone number out to everyone. I send them the recordings and notes all throughout the day, interact with them all throughout the day. I have free in-person meetups in New York and Miami for them all the time. And it's only for $80 a month. So, I couldn't find anywhere another group that has the value that I have. I even have tax accountants as my instructors. I have AI engineers. Um, I have basic beginner instructors, but I still teach like 95% of it to my entire group. So, you know, I answer people like 12 hours a day, every day. Um, so, but yeah, just wanted to jump on, just get this for you. And if you have any questions, you can always reach out to me. All right. Take care, guys. Appreciate you joining on. Oops. And I'll see you guys later.